crisis, and today we focus specifically on you and us, the consumer. Our guest at the table here is Ed Mierzwinski, a consumer advocate for an organization known as PIRG, the U.S. Public Interest Research Group. And as we look at this big bill, one of the biggest provisions, one of the ones that's drawn the most discussion and debate, is this idea of creating a new Consumer Financial Protection Bureau within the Federal Reserve. That's a biggie that's out there. Explain how this would work.
Well, Paul, the Consumer Financial Protection Bureau is an incredible idea. We think it's the biggest consumer protection since deposit insurance after the great crash of 1929. The consumer protection functions that have been going on in government have been divided up among 7 agencies. And the consumer is not always protected equally by the different agencies. And so for the first time, like we've had an agency, the FDA for drugs and food, the Consumer Product Safety Commission for dangerous toys and dangerous toasters, for the first time we'll have a one-stop shopping agency for consumer protection in the financial marketplace. It's a very powerful idea, makes a great deal of sense. No matter where you get your consumer product, at a bank or a payday lender, you'll be covered by the CFPB.
So here is another Elizabeth Warren story in the papers today. Washington Post. Warren reaches out to big bank lobbyists. Of course, she was one of the big names put forth, and there's a lot of disagreement about whether she should head the agency. Why is that, and how do you feel?
Well, my organization hasn't taken an official position, but most consumer advocates believe strongly that Elizabeth Warren has all the qualities that you need in this new agency. She speaks for American consumers. She's got a track record of studying bankruptcy and studying why people get in trouble with financial institutions. She's a professor of contract law. She understands how to communicate what this agency will do, and she's done just tremendous things. She came up with the idea in 2007.
Another aspect of the bill, this bill would allow states to impose stricter consumer laws on national banks. This is something called preemption. This is compared to the federal standards. State attorneys general get power to enforce certain rules of this new consumer bureau. Tell us more.
Well, there are many things that led up to the financial crisis. First of all, the bank regulators were asleep at the switch in enforcing their own laws. Second, the federal bank regulators took away the right of state regulators and state legislatures to pass stronger laws. So while mortgage brokers and mortgage companies owned by national banks were making a mess of our economy, state attorneys general, the best consumer cops around, were taken off the beat. This new law puts them back on the beat in many places. They're very tough advocates to protect consumers.
2 more quick points. Deposit insurance. This new bill would permanently increase the level of federal deposit insurance for banks and thrifts and credit unions up to $250,000, retroactive to January 1st of 2008. We understand.
It's been a big problem. People want to put their money in banks, but they're concerned that the bank might fail. This makes the guarantee a little bit bigger.
And for mortgages, this new bill in part would establish a new national minimum underwriting standard for home mortgages. Lenders must ensure that the borrower can repay the loan. Pretty simple, right?
Pretty simple. They must ensure the borrower can repay the loan. And something that just took effect, a new rule that will be strengthened when the new law takes full effect, brokers can't get kickbacks anymore for putting you in a more expensive loan, and brokers can be penalized if they put you in a loan that's unfair.
We mentioned full implementation could take 2 years. Before we get to calls for our guest, what has actually taken place so far? What is in effect that we can see?
Well, the Treasury Department is working very hard to take pieces of the other agencies and move them over to the new Bureau, which will start up sometime between January and July of next year. As of the start date of the law, July 21st, we have some new protections for merchants against unfair credit card practices. But most of the new law takes effect when the new Bureau starts up.
First call for our guest, Ed Mierzwinski of PIRG, Augusta, Georgia. James, Democrat. Hi.
Hello, how are you doing today, sir?
Fine.
I'm calling in regards to the new agency that's been created. And my question is that isn't this one of the, isn't this the expansion of the government that the Tea Partiers are actually complaining about now? And with this expansion, I understand that a lot of the politicians are disingenuous when they say the humongous government infrastructure, because government actually influences and in many cases, especially in the financial industry, subsidize a lot of the programs that the private sector offers.
Expansion of government, he says.
Well, I would disagree with that because I think that the Consumer Financial Protection Bureau is better government, not bigger government. Most of its employees will come from the existing agencies who were part of the system that failed to protect us. But they'll go to work only for consumers. In their old jobs, they worked primarily for banks. Protecting consumers was not their first responsibility. So this is a major step in better government. It's a really big deal.
Who would watch that bureau? Who reports to who under that?
The new Consumer Bureau, all big banks, all big companies that issue any kind of loans or mortgages would be regulated by this bureau, and all financial institutions, no matter big or small, would essentially be under the bureau's rules.
And the Fed oversees the bureau.
Well, that's an important point. We wanted, a number of us wanted an independent regulator. What we ended up with is a regulator that's in the Fed but not under the Fed. The Fed has essentially an anti-meddling provision in the new law to protect the bureau. The director reports and is appointed by the president.
Let's hear from Hartwell, Georgia. Carl, Republican. Good morning.
Good morning, gentlemen. How are y'all?
We're doing fine, sir. Go ahead.
I'm going to just reiterate a little bit more on that, on the gentleman from Augusta's question. You said a percentage, or not all of the employees were coming from all 7 entities. Why not? Why not just appoint a leader, or say a CEO of the new job that you're talking about, and just take all the employees that you need instead of hiring new ones?
Thanks.
Well, I'm sorry if I didn't make myself clear. All the consumer protection employees from those regulators are moving over. All of the regulators who do other things are staying. And essentially, we don't look at this as bigger government at all.
Mount Clemens, Michigan, Ken, Independent. Hi.
Hi, I'm just calling because I wanted to make a comment because I've heard all this about regulation and how to make consumers happier, I guess would be the word. But all I see is that greed runs this country, and that's plain and simple. Instead of on the back of money, it should say, "In greed we trust." And you can take it from there however you want, but that's the truth.
Well, let's hear from New York first. Robert, Democratic caller for Ed Mierzwinski. Hi, Robert.
Yes, hi, good morning.
Morning.
Thank you, C-SPAN, for such a good job. I was wondering, the new laws that just went into effect restricting banks from the automatic overdraft protection, I mean, was it legal before? I was charged $600 in overdraft fees for paying for parking in New York City because my website with my bank told me I had more than enough money.
That's a perfect example of the need for the new law. And the regulators recently issued limits on certain overdraft charges. Banks used to make money the old-fashioned way. They used to earn it. Over the last 10 years or so, they started promoting free checking. But there was a catch. At the back end, they were giving out costly overdraft loans. It increased as a problem when people started using their debit card for micro purchases. So you'd have a $10 purchase at a coffee shop and a $35 fee, and the bank claimed it was a privilege, a protection. So as of Sunday, you can no longer be charged an overdraft fee on your debit or ATM card unless you opt in. But we think the new Bureau needs to go a lot further, protect the people who do opt in, limit this trick that banks have, which is where they reorder checks that are clearing through your account. So if the biggest one clears first, lots of little ones will bounce. But was it legal before? It may have been an unfair policy. It may have been something that wasn't enforced by the bank regulators. They aided and abetted the unfair practices.
So staying with consumers, the topic for this part of our series, debit cards, really practical stuff for people. What else should people know? What other items are within this bill that they'll see and feel and deal with on a daily basis?
Well, I think there's just a tremendous amount in this. First of all, there are special offices that will be established in the new agency for senior citizens, for military families who have been at the mercy of unfair lending practices by car dealers and payday lenders and others. The Pentagon has been an enormous ally to consumer groups in pushing forward for new consumer protections. New protections for low-income people, new Office of Financial Literacy. There will be one telephone number where you can call with your consumer complaints, whether they're about payday lenders or banks or anyone else. And right now you contact the bank regulator if you can figure out who your bank regulator is, and they normally, they just tell you, oh, go deal with the bank. You'll have a regulator just with one job, to protect you.
Miami Beach, Florida, Raphael, Republican.
Hello, sir. Thank
Hi.
you for taking my call.
Sure.
I'm just curious. You know, I'm a 40-some-year-old male, and I've seen a few of these banks fail throughout my life. And every time they say, oh, we make new regulations and this and that, and it won't happen again. And so can you promise me with all these that there'll never be another bubble, whether it's the banks, which it seems like every 10 years, and it's like, I just heard you say in the last 10 years. No, I remember a few banking crises since I've been young.
Is the idea of another bubble connected to this topic? What can you say about it?
Well, the Wall Street Reform and Consumer Protection Act is a response to the failure and collapse of the banking system that was brought on by a housing bubble that the Federal Reserve failed to address through its monetary policy or its regulations. That's very clear. At the same time, the Securities and Exchange Commission had a voluntary program on risk for its biggest regulated Wall Street banks. There was just a mess here in Washington, and we're doing all we can. The Congress and the President are doing all they can through this legislation. I can't personally guarantee that there will be no bubble, but I have to tell the caller that Congress still has a job to do. You can't simply set up regulators and wait for them to do the job. Congress failed for many years in oversight, and the public needs to elect people to Congress who are going to demand oversight and who are going to represent the public, not the corporations.
So speaking of Congress moving forward, they need to, or the Senate needs to confirm any head of a new consumer agency. What's your sense? Take us deeper into the debate over that.
Well, I think it's Washington in August, and there's not a lot going on. And so one of the big stories is, will Professor Warren be nominated? Some people in Congress say she can't get the votes in the Senate. Other people think she will. There's tremendous support from the public for her. I think the banks are scared of her. But I don't think they should be, because she is not a radical. She cares about the public. She cares about transparency in the marketplace. She cares about fairness, and the banks will be able to work with her.
So give us a more precise sense of how much power this person will have. First of all, how long would they serve if they're
Well, it's a typical bank regulator appointment of 5 years. That means that you're protected from political machinations. If you've got a 5-year appointment, you at least overlap one presidential term. Very common. All the bank regulators have a term between 5 and 7 years. The director reports to the president, has a budget that is from the Federal Reserve, not from taxpayers. So it's from bank fees and services that the banks provide to the Fed. The same way that the other bank regulators are funded. They are not generally funded through Congress, so Congress can't meddle. So it's a fairly powerful position. It will require oversight by the Congress.
Next call, Bernice, excuse me. It's Bernice, Democratic caller from Mobile, Alabama. Hey there.
Hi, how you doing this
Fine.
morning? Thanks for accepting my call.
Sure.
Okay, I want to know, one of the most powerful pieces of legislation were in the Regulation Z of the Truth in Lending. And why is it that that particular thing is not actually done for the consumer as it should be? And why is it not protected the way that it should be? And why are you going all the way to January 2011 to give the mortgager the relief that they need from Wall Street and these crooked banks and these crooked lenders that took advantage and caused this bubble in the beginning?
It's a very good question. The Truth in Lending Act and its implementing Regulation Z are a mess. They haven't been enforced adequately. That's the law that deals with your mortgage, your home equity loan, your credit card, and any other kind of loan that you have. But we're now creating a machine, a new agency that will have the power to protect you. Congress, unfortunately, never passes laws very rarely anyway, that take effect immediately. They've got to set up the new agency. They've got to move the staff over. They've got to write the rules to make it work. Some of those things are better done by the regulators, so it will take a little time. We're urging the president to move quickly to establish the agency. It could start in January. Under some circumstances, it could not start until July, but we'd like it to start as quickly as possible because it will then look at your credit card contract, your deposit account contract, your mortgage contract, and it will say, this is too complicated, make it simpler, make it fairer.
Chicago, George, independent caller for Ed Mierzwinski of PERG. Good morning.
Good morning. Thanks for taking my call.
Sure.
I just wanted to make a comment that I think the Federal Reserve is unconstitutional. I believe giving it more power is the wrong move. I think the establishment is taking us into World War III, and everyone should check out Infowars.com. Thanks. Have a nice day.
Not the first time we've heard a comment about the Fed in that respect.
Well, I would say briefly that the Consumer Bureau is in the Fed, but not under the Fed. As Chairman Barney Frank says, it picks up its mail there, but the Fed won't be able to read its mail. By the way, we did fight very hard to get some reforms of the Fed, and there will be an audit of the Fed under the new law, and there is a better provision in the new law for how the Fed appoints its directors of its regional banks. We wish we could have gone farther with Fed reforms, but we got some things into the bill too.
One viewer via Twitter wants to know this of our guest. Does anyone really believe that this is anything but bureaucratic bloat? So earlier you said it's not necessarily more government, but better government. Talk about the streamlining. Maybe that's a word to address his concern about bloat.
Well, sure. Right now, we've got 7 agencies that regulate different parts of the consumer's financial life. And those agencies do different kinds of jobs. They don't do the same things well. And some of the kinds of financial products that you buy are barely regulated by any federal entity. Those are most of the non-bank products. The Federal Trade Commission, a great agency in some respects, just doesn't have the power to go after big credit bureaus that are responsible for creating the credit scores that lenders decide how much to charge you for. The new Consumer Financial Protection Agency will be able to examine credit bureaus. We'll be able to examine big mortgage brokers. We'll be able to go after big payday lenders in ways that other federal regulators hadn't been able to or hadn't wanted to. So that's why this is not bloat. This is better.
One other tweet. If Republicans take over, this one viewer asks, in January, can they defund or destroy the Consumer Protection Agency?
They'd have to go to Congress to try to pass a law to defund or destroy the agency. I think that this, and it's not only, my organization is nonpartisan. There are many people who oppose this regulation of both parties. We think this regulation, though, to create the Consumer Financial Protection Bureau, as I said, is one of the biggest consumer protections ever. And if it gets going, if it rolls out of the box and starts protecting the public, it'll be very difficult to roll it back because 80% of the public supports strong financial regulation.
Remind us of what PERG is all about. When did it start? How is it funded? Give us your story.
Well, we were started about 1971 on college campuses, and students hire their own staff at the beginning to help them with public interest projects. We now have members in communities as well as on college campuses all around the country. USPERG.org was started up by the state PERGs in 1984. We look at hazardous waste issues, we look at good government reform, financial health care, you name it.
There is a look at the website. And again, the money comes in how?
Oh, I'm sorry. And we're funded by citizens. We knock on doors. We're funded by college students. And we're funded by by non-corporate foundations.
Our guest's title is Consumer Advocate at U.S. Public Interest Research Group. He's been there since 1989, correct?
Correct. I've been working on bank reform for 20 years in Washington, and in the last couple of years we've really seen a change because people really are starting to tell Washington they don't like the way the financial system works.
Lots more calls coming in. Karen, Republican, Grettinger, Iowa, welcome to the program.
Morning. I have a quick comment and question. My comment is there was already regulation in place. As a matter of fact, the Federal Reserve was warned that there was a bunch of fraud going on and they chose to ignore it. I feel that more emphasis should have been put on enforcing the regulation and less on more regulation. And my comment about the financial reform bill, one part in particular, and I would like you to respond to this, is where a government, if a company finds itself in trouble and it's deemed to have some kind of economic crisis involved with it, the government can step in and wind it down. My problem with that is when the government got involved with the car companies, they gave priority to the union members, and the private investors got sunk. Their ship sunk. It's now going through the court system, and this is what happens when government gets involved. And the reason why I believe unions were given priority is because it's a fact that Democrats lean with the unions because the unions give money, and that's why we see President Obama coming out with this Walmart statement, and they're not providing health care because they're now trying to turn union. So he's trying to increase the union numbers so they can get more funds. But anyway, I would like you to comment to that particular part.
Yeah,
Thank
there's
you.
2 parts there. Why don't you speak to the union comment first?
Well, on the union comment, I'll just speak to the issue of the government. The Bush administration stepped in and asked the Congress to bail out the big banks, and the TARP program was established because there was a view that big banks and then the big car companies and other non-financial institution banks, the Wall Street investment houses essentially, and a big insurance company called AIG, all needed a bailout because they were connected to everything else. And unless they stopped the bleeding in the financial system, then the financial problem would have grown worse and worse. I don't have an answer to you as to whether private investors or workers deserved more of a bailout or less of a bailout, but the government's role is essentially to protect the economy. They did that the best they could. There are a number of different cases in the courts addressing these issues and whether or not the ownership or the executives of these big companies should pay. On the first matter, though, in 1994, the Federal Reserve was given the authority by Congress to regulate predatory mortgage loans. In about 2006 or 2007, was the peak of the collapse of the financial system. The Federal Reserve didn't take action until 2008. That's why we need a new Consumer Protection Bureau.
Wimberley, Texas. Janelle, Democrat for Ed Mierzwinski. Hi.
Hi. I'm just calling to thank you so much, Ed, for advocating for us for 20 years. Oh, my gosh. I wish we had more people like you. But I'm also have a question. Do you think that President Obama would not appoint Elizabeth Warren after all of us have been signing petitions? I'm sure hundreds of thousands of people. She has the support right across the board of everyone. So I'm hoping that he appoints her sooner than later. She is obviously one of our greatest warriors in protecting us. And just again, thank you so much for everything. I'm learning a lot this morning from you.
Let's ask our guest to respond, but the fact is Ms. Warren doesn't have support from everyone, as she pointed out.
I think the issue is that in the Senate, 60 votes matter, unfortunately, and people need to contact their senators if they support Professor Warren for the job. Thank you for your comments. I should point out that the banks hired 2,500 lobbyists and spent over $500 million to defeat this new Consumer Bureau and the other reforms in the agency. We had a small group of consumer, labor, senior citizen, community, and civil rights organizations that formed a coalition called Americans for Financial Reform. We had very little money, but we had people behind us.
What other names are out there, in your view, to head the agency? If not Ms. Warren, who?
Well, I think I've seen a number of names out there. The names you see most often are Deputy Secretary of the Treasury, Assistant Secretary of the Treasury Michael Barr, who's an architect of the President's financial reform plan. Gene Kimmelman, a former consumer advocate who has been with the Department of Justice for a couple of years, are the names we hear the most. But the The president hasn't indicated which one he is for.
Raleigh, North Carolina is on the line. John, independent, welcome.
I'm glad to be on there. Sir, I want to comment on two questions. First of all, you're talking about the credit bureau. I think these reporting agents should be done away with and the government take it over and, start everybody out fresh and that pick up the economy. And number two, if you were mentioning about the automobiles a while ago, well, in North Carolina, used car salesmen can charge and do whatever they want to. Our governor here, whatever they do, she lets them do, run away and do anything they want to do. I'd like for you to comment on that. Thank you.
Well, one of the things that was not in the Consumer Financial Protection Bureau's new protections is, in fact, car dealers. But at the last minute, Congress gave the Federal Trade Commission expanded authority to regulate car dealers. Car lenders will be under the new bureau, but unfair car dealer practices are the #1 consumer complaint to a lot of state and federal agencies. We hope the new FTC power will go after them. And as I said, the Pentagon has been a strong supporter of going after car dealers because they hurt military families. That hurts military preparedness.
In this bill, what else did PIRG get that it really is happy with? And then conversely, what did you really want that you didn't get?
Well, I think we all wanted the car dealers to be under the Bureau, but we did get them under the FTC. We actually, because the public supported this bill, after all the delays and all of the pernicious amendments were done away with on the Senate floor, interestingly, the bill got stronger in the Joint Conference Committee. That rarely happens. So at the very last minute, we gained the power of the Securities and Exchange Commission to give consumers, investors, more protections against broker-dealers who mislead them. We gained the power to ban mandatory arbitration, forced arbitration clauses in consumer contracts. Credit scores will now be disclosed to consumers whenever you get a denial or you pay more for credit. You'll get a copy of the credit score that was actually used. That's a big win for consumers. As I said earlier, merchants got a big win in the bill. Everybody doesn't realize this, but when you use a credit or a debit card, the banks collect 2 cents on average from every transaction. That adds up at small gas stations, small convenience stores, and even big stores like the big department stores. So there's going to be an opportunity for consumers to get discounts when they go to a merchant.
Back to that credit score issue, would folks get explanations of why they were denied credit with that score?
You already get an explanation of why you're denied credit under the Equal Credit Opportunity Act. It says we're denying you credit or we're charging you more for credit. Here are the core reasons, but you didn't get a copy of the score. For years, we have been fighting to get you the copy of the exact credit report that a merchant looks at, as well as your score. But winning the score is a big, big victory. People are often encouraged by the credit bureaus and their incessant advertising to buy their credit monitoring services. The scores they give you with those overpriced services aren't the scores that lenders use. So this is actually the score lenders use. It's a big deal.
Knoxville, Tennessee. Linda, Democrat, hi.
Good morning.
Morning.
I read the House version of this bill, and in that bill there was a paragraph that explicitly forbid the Consumer Protection Agency from making any regulations at all regarding usury. I assume that survived into the final bill? That's not my question, but I'm just assuming.
Well, one of the big problems is usury limits are not repealed by the new law. You're correct. And we have a situation in where there is basically no federal usury ceilings, and banks have moved to states that have bank-friendly usury limits.
If the payday lender wants to charge me 900% interest, this doesn't do any. The Consumer Protection Agency isn't going to be able to do anything.
The Consumer
about that.
Protection Agency will be able to regulate the payday lenders. Trust me on that. They won't be able to go after the credit card company interest rate, but they'll be able to regulate the payday lenders, and they'll be able to force them to provide products that are fair to consumers. Absolutely.
How might they do that regulation? What are you hoping
Well,
to see?
we'll have to see what the best regulation is that comes up, but payday lenders typically offer consumers a short-term loan for a week or two at interest rates of over 1,000% in some states, and they allow you to roll over those loans. They're just tremendous problems. We can cap the way that payday lenders impose fees. We can use a lot of tools to go after them.
Now that the bill is law, one of the major themes being talked about is the writing of these regulations over this 2-year period. How does your organization get involved in that process? Does it?
Well, the first step was passing the law. The second step is implementing the law, and the new Bureau may take effect as early as January, possibly as late as June. Some of the regulations required by Congress could take 2 years. My organization is actively involved in meetings at the Treasury. We file comments along with other consumer groups. We urge the regulators to get rid of wealth-depleting, unfair bank practices and let the banks tell consumers choices and let the consumers pick choices. Let the banks make money on fair choices, not gotcha fees.
What should we be thinking about in terms of the federal government, this law and the entities that come under it, and the states themselves, the state governments, and the connection between the two?
Well, I think that this new law actually reinstates the idea that we have a federalist system and that state attorneys general and state legislatures play a role in protecting the public, and that federal law serves generally as a floor of protection. We wanted to push back even further and make the states even stronger in the dynamic, but we did pretty well at pushing back what had been happening over the last 10 years. So I think the three things that we look at to protect consumers is strong federal laws with strong federal enforcement, state enforcement, and then private rights of action. And we accomplished some things in this law that improve the right of consumers to go to court and that improve the right of attorneys general and Congress and the federal government to protect the public.
Just under 10 minutes left in our segment. Syracuse, New York. Joe, independent, you're on with Ed Mierzwinski.
Morning, guys.
Morning.
What is your opinion of this conservative demonization of the poor, blaming them for the country's financial crisis? And also, is it possible that the Bush administration's strong arming of these banks, by the way, which I think is the reason they brought down Elliot Spitzer, because he was about to expose us. What's the possibility that their actions and Wall Street's bundling of this junk did not happen by chance? Thank you.
Well, I think there's a lot of trails that point to money and influence peddling by the Wall Street banks. We just had a very unfortunate Supreme Court decision that increases the power of corporations to influence legislation by influencing who gets elected, something called Citizens United. You can look up that case. But the solution here is to have strong federal regulation and to give consumers real choices. I totally think that the solution for all consumers is to give them an opportunity to build assets. And whether or not previous administrations demonized the poor, we now have an agency that has the job of making sure that no matter how much money you have, federally insured and non-insured financial companies are going to have to offer you products at a fair price, encourage asset building by savings accounts. There's tremendous benefits to the public, no matter what your income class in this bill.
Charles is calling on the Republican line from Kellingworth, Connecticut. Hi there.
Good morning.
Morning.
What I'd like to ask is this. As I understand it, there are 7 existing agencies that will now be incorporated into this new agency. And each of these 7 agencies has a hierarchy. Now, the new agency certainly doesn't need that many people. I'd like to know how many people can we get off the public dole when this happens? Thank you.
I don't have an answer to that question, but again, we're only taking the people from those agencies that regulated the consumer laws, but those people were under the people who protected the banks. They'll be in an agency that is only responsible for protecting the public. Will we end up with smaller government in the end? We'll certainly end up with better government, and let's hope for smaller government in the long run.
Philadelphia, Brenda, Democrats line. Mierzwinski.
Good morning,
Morning.
C-SPAN, and thank you for taking my call.
Sure.
Can you give me a moment? And in reference to a previous caller who stated that she was hoping that Ms. Warren would be elected to the board by the president, I also hope so. But this is to the moderator. You waited and made a comment and clarifying the fact that not everyone wants to see this happen, and you are so right. I wish you would do the same thing when people call up and say everybody is against the president and everybody is against his policies. You don't say anything. You allow that to stand when knowing that President Obama was elected by a mandate of lion's share of the majority, and so therefore he was elected without those people's help. But you never clarify that everybody doesn't think that his policies are bad. Everybody is not against him. You don't clear that up, and they act like that the only poor people who drug this country down was poor black people and Hispanics, when there are a lot of poor white people in this country.
Observation.
There are more white people than rich.
Observations from Brenda in Philadelphia. Let's go right to Cleveland, where Elaine is on the Republican line. Go ahead. What's your comment or question? Actually, let me make sure I've got them here. Cleveland, are you there?
Yes.
Gotcha now, Elaine. Go ahead, please.
Okay. Hi, good morning.
Sure.
You were talking about the payday loan companies and how they want to regulate them. And is it my understanding in this new law that the government can step in and tell the payday loan companies that, the consumer, they can limit the amount of loans in a year that you can get? And if that's the truth, wouldn't you say that's kind of like Big Brother stepping in and telling me what, how many loans I can get per year? And also you mentioned the 7 agencies. Most of the people will be taken from those agencies for the new agency. And then you said most of those people are going to be transferred over to the new agency, and you said those people didn't do a very good job in those 7 agencies. Isn't that kind of, stupid of the government to send, people in from these 7 agencies to the new one, and they knew from past experience and history that they weren't doing their job in the first place?
Let's hear from our guest.
That's a fair question, and I'll certainly say that I meant to say the leaders of those agencies failed to instruct their employees to enforce the consumer laws, and in fact instructed them not to. We're confident that the ones who move over will do a good job, or they won't be at the new bureau for very long. As for the payday lenders and how many loans you can take out, I don't think it's Big Brother to regulate a practice that has been shown as wealth depleting, that takes advantage of consumers. You are helped by a payday loan if you take out one of them in an emergency, maybe. But the business model of the payday lenders is to hook people like a gambler gets hooked and only pays the VIG every month. You only pay the $20 instead of paying off the entire loan. By the time you pay 20 and 20 and 20 again, you've borrowed 100 and paid them 200. I think the government has a responsibility to regulate such unfair practices.
Try to squeeze in another call or two for our guest. Baltimore, Maryland, independent. Thanks for waiting.
Yes, good morning, gentlemen. I just have a couple of quick questions. I'm a little concerned that this new consumer agency will just basically more be watered down and that it may not enforce the law. Currently, the Office of Comptroller Currency and the Federal Trade Commission store consumer complaints in a database. Now, I just hope that this new agency is not going to do that, that when someone has an actual complaint, that they will have someone that will take the complaint and it will be fully investigated, and the consumer laws will be enforced. Because currently, like I said before, all they do is store data, consumers' complaints to the database.
Maryland,
that doesn't do anything.
Maryland, we're down to our last minute here. But how about the enforcement mechanism?
That's exactly an important question, and we are asking the agency in our meetings with Treasury to make sure that consumer complaints are investigated on behalf of individual consumers, that the database becomes public so you can see whether your bank has a lot of complaints, and not to do what the current agencies do, which is throw them onto a computer database or into a box and ignore you.
We've spoken about credit and protecting credit in this segment. Can you speak to the rebuilding of credit? Once somebody has a bad or terrible record, does the bill address that in any way?
Well, I think the bill has a number of protections for mortgage people who have gotten in trouble with their mortgages, but the new bureau will obviously go after firms that make it hard for you to rebuild your credit. Going after the credit bureaus who have essentially run amok over this country for years because the Federal Trade Commission hasn't had the resources to go after them is going to help people get better credit. The agency is going to provide for financial literacy, going to teach people how to improve their credit. It's a tremendous victory for the American people.
Our guest has been Ed Mierzwinski, consumer advocate at PIRG, the U.S. Public Interest Research Group. uspirg.org is the website. We appreciate your time this morning.
Thank you.
Washington Journal every morning at 7 o'clock Eastern Time, so we'll see you back here tomorrow. In the meantime, here a look at health care, the implementation of